Hey guys, Jay here and welcome back to the channel. So moving forward, I'm going to be producing a daily crypto dive for everybody here on the channel. And what I'm hoping to be able to do is provide you a better perspective of the broader market. And I'm not just talking about crypto or stocks. I'm talking about anything externally that may have an effect on the future of crypto and how people are going to be perceiving things moving forward. So let's take a look quickly at the fear and greed index, which is sitting at 27, leaving us at a very fearful point. Now, like I've been saying previously, we're going through a situation where the market is going to continue to chopsolidate until some kind of big amount of retail money floods into the total crypto market cap itself. And I really truly believe until this happens, we're going to see more chopsolidation, and all you can do in these situations is literally just buy the lows, dollar cost average in at these low points. So whenever I'm seeing this kind of sentiment in the market, it signals to myself that I should be taking some of my dry powder and I should be dollar cost averaging into different positions that I hold. So let's take a quick look at crypto bubbles, and what we're going to be taking a look at is on the day. We'll take a quick look at the top 100 here, which is just looking like a total bloodbath. Even if you flick over to the 100 to 200, once again seeing a total bloodbath between altcoins, meme coins. Everything is being affected apart from very, very small niches. And one of those small niches, once again, is going to be meme coins. And one of these meme coins that has been moving crazy amounts during this market is a coin I think called GigaChad. And I don't know if it's going to show up on here, but it's been moving crazy amounts due to a model that looks like one of these GigaChads, more or less just promoting it, pushing it forward, speaking about it, which is driving attention into that coin. And this once again points us to the idea that we're in an attention market, and when retail begins to flood back in, those coins that have chosen to really push themselves and put themselves at the forefront are going to be seen by retail when they first come in. So let's take a look at this list of names who own the most Bitcoins. And I really do think this is interesting because although this would probably signal to your brain at first, oh wow, look how much BTC they own, they can probably control the narrative, they could probably dump the price. The situation really is, when you look at the percentage values behind the amounts of these coins, no one of these 10 holders actually have a significant amount in percentages. And these numbers can be very, very deceiving when it comes down to changing these into percentages. To me, this signaled that BlackRock doesn't control Bitcoin and Grayscale doesn't control Bitcoin. And this leaves me in a position where BTC still is in a pretty good decentralized position, as it should remain for the indefinite future. And the only way for someone to really own all of those coins is to funnel the money into those coins, which is going to be good for business anyway. So regardless of how this pans out, it's definitely all stuff out of your control, and all you can do is continue to ride the waves moving forward. So although there is a lot of bullish news out there, I think we're living in an age where everyone's looking for their next dopamine hit. Everybody's looking for the next quick amount of gains that they can get into and get out of. There's not a lot of people remaining heavily convicted to the idea of crypto itself. And I'm starting to see this more and more. But Morgan Stanley has just revealed a $187 million position in BlackRock's spot Bitcoin ETF. And this signals to myself, and it should signal to you, that smart money is aiming to buy up as much BTC as they can. And anywhere that they can gatekeep it, they're going to gatekeep it. And that's what these ETFs are. There's one substantial difference between buying into a Bitcoin ETF and buying a Bitcoin itself. You own the Bitcoin. You hold the Bitcoin and it's yours and it belongs to you. You have a 100% total control over it if you've got it in a self-custodial wallet. Whereas a Bitcoin ETF, you give them the money and they go and buy the Bitcoins. They hold the Bitcoins, they hold the value, they hold the keys, they hold the power. So that is the biggest difference between these Bitcoin ETFs. And there's a huge kind of argument, I would say, between these being positive and these being negative for the market. And I think what everybody needs to understand is, at the end of all of this, it leads to whoever's behind the gatekeeping going out and acquiring those BTCs, which is good for business. It's going to send the market up. This is what everybody's wanted. Everybody wants retail mass adoption, and this is the kind of form it's going to come in the future. Now, the US has dropped inflation by 2.9%, and we can see that in the July 2024 report, that marking the first time it's fallen below 3% since 2021. And this decline has sparked discussions about the potential for the Federal Reserve to cut interest rates as its upcoming September meeting. And if we're looking at September and how relevant this is to the crypto market itself, historically, during the last bull run halving event, it's around this time that we're possibly going to see that big move. So if these interest rate cuts come in around that time and they start to happen not just in the United States, right, but in the United Kingdom as well, then we could possibly see that historical pattern play out again. We could see the historical movement that we saw during the last halving event. So inflation rates are rising for the first time this year in the UK, and that's gone up to 2.2%. And once again, this is pretty significant for crypto just because of how interwoven the UK and the US are into the financial ecosystem. So with that being said, seeing those two articles, we can go out and we can see that there is talks around these interest rate cuts expected after the US and the UK inflation reports. If we see the US and the UK hit these interest rate cuts around the same time as we have historically seen BTC move upwards previously, then we could be looking at an overall positive reaction in the crypto ecosystem. So let's go over and let's take a look at this recent data breach that has happened in the US, and reports are suggesting that hackers may have stolen the social security numbers and personal information of nearly every American, totaling at around 2.9 billion records. So this in itself is a very interesting subject, and you would think to yourself, how does this even have an effect on crypto, Jay? And I would say to everybody, well, this falls into the current narrative that's playing out on a global scale. And it's not just in the US we're seeing these huge data leaks, we've also seen them in the UK as well. And back in May 2024 of this year, we saw that the NHS had a huge data leak. So once again, with the global narrative that's currently playing out, we're seeing a lot of conflict. And wherever there is conflict, there is going to be instability. And wherever there's instability, we're going to find the everyday average Joe looking to invest in something that is relatively stable. And when we think about relatively stable assets, we think about gold. And if we go and we look at gold prices currently, we can see that they're sitting at an all-time high. They are very strong. And this shows us that that instability that is playing out on a global scale is leading people to put their money into things like gold. So when it comes down to these stable assets, we think about silver as well. And silver itself is currently looking very good. It's just below an all-time high, but nonetheless, it's looking very healthy and very vibrant. In these current market conditions, this is not good. This really does point to the idea that global conflict is worsening. And we're also seeing stocks like Lockheed Martin also sitting at all-time highs. So this once again plays into the global conflict narrative. So what I start to think about when it comes down to this situation, which I hope never ever plays out, and I hope crypto never ever has to live through any kind of world war. But if in fact this does happen, what are the chances that the everyday individual is going to A, put their money into gold, or B, put their money into crypto? During World War II, the United States introduced the Gold Confiscation Act. I think it was Order 6601. Someone can quote me if I'm wrong. I've covered this in a previous video. With that being said, if people during World War II could have put their money into crypto instead of having to stash away gold, hide gold, do illegal things, would they A, put their money into the gold, or would they B, put their money into crypto? And I really think we're looking at B. I think everybody is wise enough to know that the governments themselves control the inflow and outflow of gold for very specific reasons during wartime. because historically it's been the only thing that's accepted as currency. Now, crypto itself and Bitcoin itself is very decentralized. So what I'm going to be doing is producing a pretty in-depth analysis of how this could affect crypto in the future. So keep an eye out for that video. I hope you enjoyed this broader crypto market update. I hope it gives you a better perspective as to where all of the money's currently going, what all of the eyes are on. And it just looks like it's a situation playing out where these unstable times are leading people to find stable investments. And once again, this isn't good for the overall crypto market because people aren't looking to invest in this side of things. So we're going to have to see how things play out. We'll keep an eye on things. We'll keep looking at that global conflict tracker and hoping that things do eventually die down. And I think crypto's reacted pretty well when it comes down to the recent events that have played out, because historically, when you look at things, Russia hasn't been invaded since World War II, and they've just been invaded by Ukraine, and crypto's not really flinched. So it's starting to lead me to the deeper idea that crypto truly could become a safe haven for everybody during the times which lead us to these very unstable situations. So if you like the content here, don't forget to like, subscribe, comment, hit the notifications bell to stay informed. And aside that, stay safe, stay humble, stay aware. And as always, I'll catch you in the next one.